Welcome to this Delta Debrief presentation on Chipotle's Q2 2025 financial results. In this session, we will review notable changes in the company's financial metrics, operational strategy, and industry positioning using publicly available disclosures. This presentation is for informational purposes only and does not constitute financial advice. All commentary is based on publicly available data from SEC filings and earnings communications. Please perform your own due diligence before making any investment decisions. Here's a quick overview of the topics we'll cover in this debrief. We'll examine 7 key areas: financial snapshot, segment performance, management commentary, initiatives and strategies, peer comparison, risks and challenges, and finally, key takeaways. Let's begin with the financials. Total revenue for Q2 reached $3.06 billion, up 3% year over year. Net income was $436 million, down 4%, and diluted earnings per share came in at 32 cents. Operating margin declined to 18.2% due to higher labor, marketing, and occupancy expenses. Free cash flow for the first half of the year was $1.12 billion, essentially flat compared to last year. Cash and short-term investments totaled $1.55 billion as of quarter end. Chipotle reported zero debt, continuing its strategy of funding operations and buybacks internally. Revenue growth was driven by new store openings, while comparable restaurant sales declined 4% due to lower traffic. Margin pressure came from wage inflation, new unit ramp-up costs, and food input prices, partially offset by prior pricing actions and operational efficiency. Now let's take a look at segment performance. Chipotle reports results as a single operating segment. U.S. food and beverage revenue for Q2 was $2.98 billion, up 2.8% year over year. Delivery service revenue declined 14% to $15.6 million. Comparable transactions fell 4.9%, while average check increased 0.9%. Management noted that comps turned positive in late June and continued into July. The company opened 61 new restaurants during the quarter, including 47 with Chipotlanes. Total restaurant count reached 3,839, with an additional 5 licensed units. Labor and occupancy costs rose due to wage increases and expansion-related expense. Digital orders made up 35.5% of total food and beverage revenue. Let's move to what management shared in their commentary this quarter. Management revised the full-year comparable sales outlook to flat, citing continued volatility in consumer spending and value sensitivity. Despite weakness in May, comps and transactions turned positive in late June and remained strong into July. The Summer of Extras digital campaign had 5 million participants and helped drive a 14% year-over-year increase in new loyalty signups. Product innovation like honey chicken and adobo ranch led to higher order attachment. Chipotle continues to invest in operational efficiency. Over 70% of stores now use an expo position, and new kitchen equipment is being rolled out chain-wide over a 3-year period. CEO Scott Boatwright reaffirmed long-term targets of 7,000 stores in North America and $4 million in average unit volume. Now let's shift to the company's strategic initiatives. Chipotle's strategy is centered on 5 pillars: operational excellence, brand visibility, digital engagement, access expansion, and people development. The high-efficiency kitchen equipment package is being deployed across new builds and retrofits, starting in Q4. Catering operations will begin pilot testing this year using the upgraded format. Digitally, the company enhanced app functionality to enable personalized messaging and offer prompts. A college-focused loyalty campaign is planned for the fall. International growth continued in Canada, Europe, and the Middle East. The first restaurant in Mexico is expected to open next year through Chipotle's licensed partner Alsea. The company also holds equity stakes in automation firms through its Cultivate Next venture fund. Now let's compare performance against industry peers. Chipotle's 3% revenue growth in Q2 was below that of some peers like Yum Brands and Shake Shack. But store growth remained strong with 61 openings during the quarter. The company continues to operate with zero debt and over $2 billion in liquidity. Restaurant-level margins of 27.4% remain among the highest in the fast casual category, despite inflation pressure. Digital sales made up 35% of revenue, comparable to Starbucks and other loyalty-driven platforms. While international exposure is still minimal, early traction in Canada and Europe points to potential long-term expansion opportunities. Let's now turn to risks and challenges. Chipotle outlines several risks for the second half of 2025. These include softness in discretionary consumer spending, especially among low-income households, and inflation-driven cost increases in labor, food, and marketing. Tariff headwinds are expected to reduce margins by about 50 basis points. The company also faces a shareholder lawsuit over portion size disclosures and other legal matters related to insider trading allegations. Finally, competitive pressure remains elevated in both urban and suburban markets. Let's wrap up with the key takeaways. Chipotle continues to deliver strong free cash flow and maintain a debt-free balance sheet. Q2 revenue grew modestly, while comps turned positive late in the quarter. New unit openings and digital loyalty campaigns are supporting traffic and engagement. Operational upgrades are in motion, though margin gains may take time to materialize. The long-term goal of 7,000 stores and $4 million in average unit volume remains in place. Execution around brand perception, throughput, and targeted marketing will be critical in the back half of 2025. This concludes the Delta Debrief on Chipotle's Q2 2025 results. This presentation is for informational purposes only and does not constitute financial advice. All comments were derived from publicly available company filings and communications. While we strive for accuracy, this debrief may contain errors or omissions. We encourage you to refer directly to the company's Form 10-Q and other official filings for complete and verified information. Always conduct your own due diligence before making any investment decisions. Thank you for listening.